Okay, all right, listen up now. This is for you, the persons that know me. My name is David Richardson, as you can see on the screen. Many people around the United States and some persons outside of the United States know me because I'm a tax accountant that started preparing income tax in 1968. I'm going to introduce myself in detail at the end of this presentation. I'm going to show you my picture and everything, and you will then know who I am and what's being presented to you. You as a taxpayer in the United States of America or persons that pay tax outside of the United States, I don't know anything about those tax outside of the United States. I do have clients in Israel. I have clients in different parts of the world, but these are United States citizens that I prepare their income tax for outside of America, and those many of those inside of the United States I've been prepared income tax, as I said earlier, since 1968. This is not primarily about your income tax, but yet it is introducing you to the mechanism that you're going to have to put in place in order to curtail some of the liabilities, tax liabilities that you are subject to face under this new 2018 tax law. No one right now has actually seen the process of the 2018 tax law because the government itself has not finished putting out the instructions that you're going to have to adhere to to prepare your 2018 tax day. I'm going to give you a video in this process to show you what your 1040 looks like. It's about the size of the postcard that you see on the screen. Is even much smaller, but it's in different kinds of schedules, and they've added more schedules to it than what about 6 schedules, and those 6 schedules will enable you to decrease your liability and also decrease your refund and increase your liability. We're going to get into all of that, but this is about the gift as well. Now, the gift is, all the information that you see on the screen is what we're talking about. First of all, you're going to receive a gift of $1,000. Okay, the gift of $1,000. You can get all that information, that detail. Simply go to the Diamond Review Lifestyle. The name of my company is the Diamond Review, and this been going now since 1968. I said earlier, the Diamond Review, and the Diamond Review Lifestyle is a video. It's going to take you to a video to show you exactly what you would be getting involved in. Money Funds My Lifestyle, which is in white directly up under the DiamondReviewLifestyle.com, moneyfundsmylifestyle.com. That's going to take you into the shopping network that I'm really putting this on for. That's a result of the gift. The gift is where if you say yes, you're going to benefit, and if you say no, you're going to benefit. What am I saying? If someone give you this $1,000 gift card and you accept it, you're going to benefit from it if you follow the instructions that you will see at the DiamondReviewLifestyle.com. If you follow those instructions, you're going to benefit tremendously. If you do not follow those instructions, you will benefit, but not as much as you would if you do not accept the $1,000 gift. I'm a travel and lifestyle advocate with Good Life USA. Good Life USA is the primary parent company, but one of the divisions of Good Life USA is this travel and lifestyle advocate process that I'm involved in, and I can give you something that you really should accept. I didn't tell you that it was more blessed to give. That has come from the creator of the world. He said that it is more blessed to give than it is to receive. In other words, when you give something, the first thing that you hear is blessed. And the one that received whatever you were giving, that person received that gift, but you'll get the blessing from that person using the gift that you gave. So I'm not going to get too hung up on that right now. You'll see my code at the bottom, my activation code. Well, the company started in August of 2018. That's how young this company is, 2018, but it's servicing all 8 billion people on the globe. All 8 billion people on the globe lives a lifestyle, and this company primarily is about your lifestyle, then even though you can book travel through your own booking process. But we're not going to talk about that because the subject of this presentation is for the lifestyle that you live. And as a result of you living your lifestyle, all the monies that you need in your lifestyle is what we're going to be talking about. And money does fund one's lifestyle, or it does mine anyway. But nevertheless, the activation code that you see is 83. I'm the 83rd person that joined the company. The 83rd person out of 8 billion. Now, I don't know what number you're going to be, but I can tell you that it's going to be a whole lot less than 12,000. I don't think that it has surpassed 12,000 right now, but I'm telling you, you do not want to pass it up if you want to be up in the upper echelons of the company. It is less than 3 months old, started in August of 2018, and we're now in November 2018, and I really don't have all the dust off of the thing, but now let me put this to your rest right now. All the money, and that's one thing that person's already asking me, what is this going to cost me? All the money we're talking about in this whole presentation is $20. It'll cost you $20 to save thousands and thousands of dollars. It'll cost you $20 to earn thousands and thousands of dollars. Put it to rest. You're going to become a travel lifestyle advocate, and a travel lifestyle advocate is a business. We're going to be talking in a few minutes about the United States tax code that just changed over a period of the last 30, 40, 50 years. The code has not changed drastically like it did in 2018. December the 22nd, the President of the United States signed a new tax law. It took effect January the 1st of 2018, and that law will not enable you to do a whole lot if you don't have a lot. And what I'm talking about, if you don't have the three major ingredients for you not to pay tax, and that's what we're going to be talking about in this presentation, which are people, property, or business. And many of my existing tax clients know what I'm talking about. And those of you who have not gotten my counseling, you need to understand what I'm talking about. And above all, you should get understanding. I'm going to go on with this presentation as now, and I'm going to show you some videos, 3, 5, 8, 11 and 15. Those are the slides. I'm going to show you videos, I hope, in this process. And I've been trying to work this for quite a while, and I hope that it's going to work as we go through this process. Okay, now here's the back side of the card that you just passed in the first slide, and your personal cashback bank. We're going to show you in a minute how you're going to set up a cashback bank. But when you put money in the bank, you're going to put the money in your bank, and all the persons who visit you are going to put money in your bank. And your bank is going to give you or issue you a debit card with your number on your card, and your expiration date on your card, and your name on your card, and on the back of your card is going to be your code in order for you to make a purchase or do whatever you're going to do with your debit card. It is a bank. Your personal cashback bank, and I'm going to show you how you're going to arrive at that in a few minutes. And now you can do this by phone. So I put this also here for you to see that I have a mobileshoppingmall.com. My mobile shopping mall puts money into my cashback banking system. Now my mall puts money into my cashback banking system, and this company issues to all of its employees, and I'll use that term loosely because what we're going to talk about in a few minutes is going to be the benefit hub, and a benefit hub calls an employee, even though you're not an employee, you are a depositor of this cashback banking system, and we're going to talk about that and how you make your deposits on every hour of the hour, every second of the day, should you choose to make a deposit, and you can withdraw money out of your bank through the process of this debit card. So if you have $1 million in the bank and you want to spend $1 million, simply do it through the process of this card. Now the company at the end would notify you as to how much money you put into your bank and how much money you've taken out, and you will at the end of the year be notified. So because in the United States of America, you have to disclose income, and this company is one of the better ones for disclosing income. The founder of this company has been involved in businesses like this for quite some time. He left an $8 billion company to come and start in this conglomerate, and I say conglomerate because we're entering into a multi-trillion-dollar industry on the travel side, but the lifestyle side is much greater than the travel side, because all 8 billion people for which this company is servicing lives a lifestyle, and all 8 billion people have to have, like I said earlier, you need money to fund your lifestyle. So it's just that simple. No, now we're going to go on with this. That was the video, and I hope that you watched the video and listened to what the video is saying. and adhere to what it's saying, because it's talking about you having a business. That was the first video, and you're going to have 3 or 4 more videos I'm going to show you. Now, home-based business is what we're talking about. You need people, property, business, and that's what we're talking about. You having the income, expenses, and operations, or operating this as a business. The United States started a new law, as I said earlier, tax law. If those of you who don't know, and you would have to perhaps been on the rock not to know, that as of January the 1st of 2018, the United States enacted a brand new tax law, and you need to have 1 or 3 ingredients, or either all ingredients. The more that you have of people, the more businesses that you have, the more properties that you own, that's will enable you not to pay as much tax as a person who don't have any kind of business, don't have any kind of property, or no people. And there are persons, whether the government changed this down to a standard deduction, a single person would have a standard deduction of $12,000. A head of household person, a head of household is a person with a child or children. A head of household person would have $18,000 standard deduction, and a married couple would have a deduction of $24,000. Now, if you are married and you're filing separately on the return, you would only have 12 for each in the married person, 12 on one side and 12 on the other. But if you file as a joint, you'd have 24,000. See how I go? If you're a single person, you'd have 12,000 standard deduction. There, if you're a head of household or an individual with children or a child, then you would have 18,000 standard deduction. And that's not going to do very much if your income is, say, over 100,000, and you're going to reduce that 100,000 by 12. It's not going to do a whole lot with you in terms of you paying tax. And if you don't have a child, you don't get the child tax credit. All you have is just a $12,000 standard deduction. That's if you don't have a business. Okay. Excuse me, because your mortgage, if you have a mortgage, your mortgage interest is limited to $10,000, and your tax, real estate tax, and the salt tax down to $10,000. So you're talking about $20,000 in deduction. And if you're a single person, you would stand a better chance by taking the the itemized deduction of $20,000. But if you don't have anything other than that, you would only have the $20,000 to reduce your $100,000 down to $80,000, and then you pay tax on $80,000. And if you're not holding a whole lot out of your earnings, then that's going to enable you have to pay at the end of the year. Well, I'm going to get on with this, and I'm spending too much time on this, because all this is going to be provided in a form of a video form. That's one of the videos that we're talking about. I get mixed up on my time here, but okay. Travel and lifestyle advocate is what you're going to become. You're going to become an independent business owner, and as an independent business owner, you want to use and understand the new 2018 tax law. And as a result of you having the 2018 tax law understanding, then you will know that this travel and lifestyle advocate business that you're involved in will cost you $20, and that's tax deductible, the business expense, and your right to have your access to your mobile shopping mall or your shopping center is going to cost you $10 a month to maintain your website. $10 a month to maintain your website, and that's $120 a year. So we're talking about a total of $140 to maintain the whole startup of your business per year. $120, but one time out of pocket of $20 to start your business, and all of the expenses that you incur, you're going to record those on your tax return to reduce your tax liability. Knowing even if it's for married persons who have a whole lot more than this, and a property, rental property, it says for any lot of everybody to do this, and you're going to become much better in terms of saving and refunding your tax dollars on your tax return. Okay, so now we're moving on. All right, now here's the gift that we're talking about. In the video that you saw is what they're talking about. You unlock the gift. The gift is the business, and the business is a $10 monthly fee for you to maintain your business, $10 a month. But now I'm going to show you in a few minutes why you would want to spend that $10 per month and what it means to you to have it tax-wise. It's going to be a tax deduction of $120 a year. That $10 a month, you're going to write that off. And the $20 one-time startup fee, you've all would write that off as well if you start the business in 2018 And if you started in 2019, it would be a write-off in 2019, and the monthly fees would be at the end of the year. So make sure you go to the diamondreviewlifestyle.com, watch the video over and over again. It's going to come up on the screen looking just like this. And if you didn't previously play the video, that was sit there for the play, because sometimes YouTube don't play the videos that are uploaded on YouTube, and I'm going to say that because I've gone many times to try to play videos on YouTube and it just won't play. Just something with the handshake, I guess. But make sure you go to www. or just put in diamondreviewlifestyle.com, and it'll take you to a video that you can watch. Now watch it. I'm going to go now to the next is going to be a video for you to pay attention to. Okay, now here is the old 1040 Schedule A. The old 1040 Schedule A, and I'm showing you this to show you how it would have looked had it been in 2017. But now the government no longer using this Schedule A. They're using Schedule 6 schedules that go attached to your 1040X, 6 schedules. And it had Schedule A, B, C, D, E, F, all like that, but now there's no longer A, B, C, D, E, F. The A was for itemized deduction, the B was for interest, and the C was for businesses, and the E was for properties, the D was for the dividends and stocks and bonds, etc., and the F was for farm. They for a farm. They don't have that anymore. They've added now the numbers: Schedule 1, Schedule 2, Schedule 3, all the way up to Schedule 6. The significance of me giving you this information here is to show you that your limit for your tax is $10,000, and the limit for your mortgage is $10,000. If you are a single person and you got a house and you're paying for a house, and you're paying, in many cases I have clients that are paying as much as $18,000 in real estate tax, and along with the other SALT tax that you see, and we call it SALT because that's the term that was used, SALT, but they're paying a whole lot in tax, much more than $10,000, and the mortgage interest in some cases are astronomically high, up into the 30s and 40s. But now the limit is $10,000. Now imagine you only having that and no business. So what this is about is to introduce you to the business side of this, and I'm going to go down to show you the bottom part of this, because the bottom part is that it has been completely eliminated. The only thing on that has not been eliminated and not touched with regard to a limitation is the contributions. And you can contribute as much as you like, but you need to have a record of what you're going to contribute. So your contribution is going to be the only thing that does not have a limitation or an exemption amount on it. But all the other things have now been excluded, completely eliminated, are your miscellaneous deductions. So forget about that. That's not a part of it. The purpose of me showing you this is to show you that it would have, what you would have if you don't take advantage of this and do something else. Okay, now upcoming is a video. I hope you watch the video in its entirety to get an understanding of what is being presented. Okay, and then we're going to go on. All right, now this is a Schedule C. The Schedule C is for if you have a business. Now they no longer have Schedule C's. They're using, unless they change the instructions for what I've seen the 1040 form of the 1040. You'll see it in the video in a minute showing you the schedules is 1, 2, 3, 4, 5, 6. But Schedule C is for a business. The business side of this is where if I make $11,000 in business income doing this same process here that we're talking about, for you having money going into your cashback bank, and it was $11,500, that would be the income that you would report to the government or internal revenue to show that you had $11,500 going into your cashback bank. Okay, now on the bottom side of that, this is where the expenses would go. If you had advertising, if you had depreciation on your equipment and your computers and things like that, on your automobiles, or if you use automobiles in your business, if you had contract labor, that means someone to take care of your lawn or whatever the contract labor is, insurance, all these expenses then would add up to what you see on the screen, the $35,008, because on the other side, your other expenses is the second part of this. The other expenses total up to the $19,743. So that's coming from line 27 on your Schedule C. So your other expenses of the $19,743 plus your expenses is a total of $35,008. But from that $35,008, you're going to subtract the $11,500 that you saw at the top, and that's going to give you a net loss of $23,508. Well, that $23,508 would be added on to your standard deduction or to your limited amount of itemized deductions. I said limited amount because it is limited to just what your 10,000, and your contributions will be your itemized deduction if you're going to take that route. And if your itemized deductions is more than 12,000, then you would want to take that. If it's more than 18,000, you'd want to take that. If it's more than 24,000, you would want to take that. But then you'll be giving away a whole lot because your mortgage interest and your real estate tax would only be 10,000. So again, you want to do what we're going to be recommending in just a few minutes. Okay, so moving on. Here's what I'm talking about for you to have in your cashback bank. If you've gone there, I hope you've already gone to Money Funds My Lifestyle. That's what you saw was this cashback bank. And I call it a cashback bank because this is a world largest shopping center. On the left side, I only could show you just a portion of what you're going to actually be doing. But this is a discount and reward process. A discount and reward process. You get the reward and your customers, and you also get the discount. If you can understand what I'm saying. Here's an example, a prime example. If you were to have a person to come to your website, to your mall, and buy an automobile through your mall. If they live in Chicago and they want to buy an automobile from a dealer in Chicago, they will simply go to that dealer in Chicago and buy the automobile, saving $3,383. Well, that person or you would save the $3,383 by buying the automobile, shopping, going through the process of shopping where you can pick up your automobile from. It's going to, whatever you buy and whatever you pay for it, you're going to save $3,383. Regardless of whoever you are, whether you're in this business or not in this business, your customer would save $3,383, and you would receive $405.96. If you decide you're going to buy the car through your network, then you're going to buy the car for $3,383 less, and you're going to put in your cashback bank $405.96. So you see how it is go work. So now let's say for an instance that 10 people or 100 people throughout a year bought a car, and they bought it through your website, because you're the one that's doing the advertising to tell a person to come to you and telling them why they need to do what you're doing. And that person do what you're doing, you're going to receive $405.96 every time an automobile is purchased. And that's not just automobile. If it was toothpicks, whatever regardless of toothbrushes, it doesn't really matter, because whatever an article is that you can name, you have it in your store. I just merely pull this out to give you an idea as to what something like an automobile would do. You see restaurants, you see local deals, you see the newest deals, you see the most popular, you see brands, and the list goes on. You say pay over time. If a person want to pay on using a system that used to be where you could put things in a layaway, well, that's what pay over time means. You don't pick the article up until you actually finish paying for it, but you can pay a percentage on it. So if it was selling for $500 today and you knew it was going to go up to $800 tomorrow, then you'd put down $300 on it, and it would save it. So you go back to the next day and put your $200 on it, and then you would get it for the $500 as opposed to getting it for the $700 that it would have gone up to. Now, one significant thing I want to point out is the languages up there. You see what my name is David Richardson. I'm an American, and I'm using the English to put this out. But regardless of what language you speak, you can have the same thing. It doesn't matter, because we are servicing 8 billion people. So regardless of where you are, you're going to have the same thing, and you're going to have even more, because the more people that you tell about this, you're going to get a percentage off of whatever they do. If they buy something and they're not a member, but just a customer, then you're going to get all of what they would be of the 12%. That would be all of yours, regardless of who it is. But if you told someone about it and they got a savings of 12%, and you got 50% of the $405 times, say, 2,500 people, you see what we're talking about, how much money you were talking about. So I told you, if you accept the gift, you're going to benefit, and if you don't accept the gift, you can still benefit from the process. It doesn't really matter about who you are, what you are. of what you've done. Now, the next thing I'm going to show you is going to be a video, and then I'm going to conclude this because I have been with you now for quite some time, and I don't want to take up too much of your valuable time. Again, let us move on. All right, so that was the last video, and that video is giving you an idea as to what the 1040 looked like and what it's going to look like from now on, because over the past 40 years, it has looked one way. But now it's a whole new process looking like a postcard, and the postcard is made up or filled out from the 6 schedules that we talked about in the video, 1 through 6 schedules, to give you an idea. Now, as you notice, the government have not put out the instructions for it, and we're in November, and I hope that they're going to come out with between now and the 1st of January 2019. If not, you're going to have to wait in order to prepare your 2018 tax returns, because the forms that's required for you to prepare them have not yet been put out. Okay, I'm going to include this now. My name is David Richardson. Excuse me. My name is David Richardson. Excuse me. I'm so sorry about that. My mouth gets dry as I talk, but this is the last slide. My name is David Richardson. I am a graduate of the University of Arkansas at Pine Bluff, and I graduated in 2067. I started my tax business in 2068, and we are now in 2018. I had an accounting degree from a Bachelor's of Science degree, from a BS degree, as we call it, from the University of Arkansas back then. And I majored in accounting and business administration, and since then I went on to graduate school with sought for my master's degree in accounting. I also sought for a master's degree in management information system. I have extensive study in CPA review before taking the CPA exam. I have extensive study in business law, thinking I was going to go to law school even after completing the study for the master's, but I decided I didn't make the decision. Someone else made a decision for me not to go to law school, but nevertheless, and then I have extension in insurance, mutual funds, stocks, bonds, all real estate, mortgage broker. So I've been around for a couple of days doing things, and I can help you. And if there's anything I can do to help you, I will, because God said it's more blessed for me to give to you than it is for me to take something from you. So if I want you to know that what I've been giving you in this presentation is for you to take heed to it. Make sure that you spend the $20. They're going to send you a debit card. You put the debit card in your pocket, and then you make sure you go to Money Funds My Lifestyle and watch the information that you can shop. Set up your own shopping network so people can come to your network and buy things like automobiles, like furniture, like houses, apartments. They can buy anything that's sold in your shopping network. It's a shopping network, and you are going to have to pay $20 to get it started and $10 a month to maintain it. That $20 that you started up with is tax deductible. The $10 a month is tax deductible. And I can tell you now that the $405.96 that you saw a while ago, that is taxable. But all your other expenses, you're going to subtract them from that, and if your first 2 to 3 or 4 or 5 years, according to the Internal Revenue, you're most likely going to be operating at a loss. And that loss, the $23,000 I showed you a while ago, would have been a loss, and you would have written that off. Add that on to the other $31,000 that you saw on the Schedule A, and that would have been your $50,000+ write-off, subtracted from your $100,000 income, and that means you would have been paying tax on $50,000 as opposed to paying tax on $80,000 if you don't take advantage of the opportunities that I've been explaining to you. Again, give me a chance to help you. All you got to do is make a decision that you're going to enroll, one-time fee for $20, and just take it from that point on. If you enroll up under me, you'll see all how to contact me. All of my contact information is there. I don't have a need for you to contact me if you don't enroll for me to help you to do what I'm doing. But if you have questions, you can also call the company, because the company information, when you go to the Diamond Review Lifestyle and watch the video, the contact for the company is on that if you want to get those answers from the company. But if you want to get help from me, then you would have to enroll under the activation code that I have given you, and you can go to either moneyismyplanb.com, moneyismyplanb.com. You can enroll there. You can enroll at the diamondreviewlifestyle.com. You can enroll there. It's all going to take you to the same place that you would watch the video and also enroll after you watch the video. Thank you for watching this, and I hope you have a God blessed day. Make sure, I'm going to say it again because it's so important for you to know, make sure you go back and watch the video, enroll, and spend the $20. That's all. It's going to help you. Bye-bye. Bye.
Welcome to The Gift. In the next few minutes, I'm going to ask you to make a yes or no decision. It's a decision that will impact your life forever, and it's also the easiest decision you'll ever make. My name is Mark Seaforth, founder and CEO of Travel 10, The Gift, and several other travel companies. I wanted to personally share this story with you because of my deep passion and sincere excitement for what you're about to see and hear. Maybe once in your lifetime, something comes along that is really different, something that can impact your life forever, something that is truly easy, something that actually saves you thousands of dollars year in and year out, something that can give you a life-changing income, something where you can't fail, you can only succeed, something that is fun and exciting. What I've just described is the gift. The person who shared this gift with you has already told you that if you can say no to the gift, you will receive a $1,000 gift card. So, for the next few minutes, simply watch and listen closely and then make your yes or no decision. Either way, you win. So let's get started. The gift is about answering two questions. First, would you spend $10 a month to save yourself thousands of dollars every year, and I mean literally thousands of dollars, on all the things that you love to do? Yes or no? Second question, would you spend $10 a month for a business to make thousands of dollars a month in and month out, and quite possibly become wealthy without ever having to sell anything? Yes or no? Of course you'd answer yes to each question if you believed it was real. So let me share with you the story of the gift and how real this is. You joined Travel 10 as a travel and lifestyle advocate, TLA, for $20 a month. That's your total risk. You now have private access to the world of travel and lifestyle benefits at true wholesale pricing. This is pricing that's not available to the public. Secondly, you now own a business that makes you money simply by sharing the gift with others. And whether they say yes or no, you still make money. Now think about that. It sounds incredible and impossible, but as you will see, you can only win. I'll explain how in just a minute. First, let's go back to question one of the gift and prove how spending $10 a month can easily save you thousands of dollars a year on all the things you love to do. It starts with a $40 million travel technology platform that you get to use as if you owned it yourself. Vacations and travel together make up the largest business industry in the world, creating revenues of more than $1 trillion a year. Folks, that's a big number. Today, almost all travel is booked online or direct with the hotels. Either way, you're paying retail. With Travel 10, you will be paying wholesale for your vacations and travel for the rest of your adult life. How smart is that? Here's how we do it. Before Travel 10, when you booked your vacation or travel online, you were booking only through Expedia or Priceline. That's right, they own all the others. That in itself is a big surprise to most because you don't have the choices you think you have. Plus, you are paying public or retail pricing. Travel 10 is the exact opposite. Travel 10 is private access, not available to the public, and therefore provides the same hotel or resort at wholesale pricing. Let's take a look at a real-time example. You are looking at a screenshot from Travel 10's hotel and resort website. The example shows a 3-day stay in Orlando. If you look at the drop-down window, the lowest public price is $592. Your price through Travel 10 is $349. You save $242. Now that's a serious savings. Let's look at a 1-week international stay in Rome, Italy. Personally, it's one of my favorite places in the world to visit. The public price is $1,444. Your price through Travel 10 is $873. You saved $571. Again, a big savings. And think about this. We only showed 2 examples of more than 500,000 plus hotels and resorts worldwide for you to choose from. As you've seen by the examples, it would be easy to save $1,000 on your annual vacation or travels. But what if you're not traveling? Travel 10 can still save you hundreds of dollars every month on all the other things you like to do close to your home. Sporting events, entertainment, amusement parks, save a real 10 to 20%. Movies, save 40% on tickets. Dining out, spend $20 to save $100. Even with your everyday shopping, you save serious dollars. This all happens through your Travel 10 subscription, which is not available to the general public. For me, what makes the gift and Travel 10 so exciting is that it is 100% real. A true value proposition for every person in America. No games, no gimmicks, just tremendous savings every day of your life. And since you're now in the travel business, there are even tax benefits for much of what you do, which means even more dollars back in your pockets. And the best part is yet to come. The answer to question 2 of the gift and how spending $10 a month to own your own business can easily make you thousands of dollars monthly. I know it sounds ridiculous to say own a business for $10 monthly and make thousands monthly, but again, it's 100% real. So let's look at how simple and easy it is to build a lifetime residual income from simply sharing the gift. Someone shared the gift with you, either person to person or through social media. By doing the same thing, this is what you can earn. This example is based on you having 10 people who want what the gift has to offer. It could be much less, 1, 2, or 3 people personally, or way more than 10. No matter what you do, you win. When a person joins Travel 10, they become a travel and lifestyle advocate, for short a TLA, and a customer. The example is based on each TLA having only one customer, only one. All commissions are based on customer subscriptions. By default, most people will have 5 or more customers, which makes this income example much larger than shown. Your goal is to have 10 TLAs in the first 30 days. With the gift and what this business offers, that's pretty easy to do. But if it takes longer, who cares? Look at what 10 TLAs with only 1 customer each creates an income for you. The first generation is $10 a month in income. In effect, each TLA, who also is a customer with 1 customer, equals $1 in income per month per TLA to you. The second generation of income is based on 10 TLAs, each getting 10, or a total of 100, which equals $100 per month. The third generation equals 1,000 TLAs as customers with only 1 customer, each making you an additional $1,000 per month. The next generation equals $10,000 per month in income to you. And it goes on through 8 generations at 10% of all customer commissions. And all it takes to qualify to receive income on your 9th and 10th generation is 2 more customers. Of course, the illustration shows you what can happen, but this is not a guarantee of income. Yet, a little work can go a long ways. And whether you have 1 person on your first generation or 30, dreams do come true. It's totally up to you. Now it's time to make your decision. But first, one more little surprise. Remember, you were told that if you can say no to the gift, which is this amazing, life-changing opportunity, you would receive a $1,000 gift card for saying no. And that's true. You'll be given private access to Travel 10's hotel and resorts booking engine that you can use at no cost until you've used up $1,000 in real savings. But here's the wow factor. When you save a legitimate $1,000, the person that shared the gift with you receives $500 cash. Yes, that's correct, $500 in cash. And you don't care because you saved a real $1,000. Imagine that. You say yes and join Travel 10. You and the person that shared the gift with you both win. You say no and accept your $1,000 gift card with no strings attached. You and the person that shared this with you both win. There's nothing like this in existence. To summarize, the gift in Travel 10 is a simple and affordable business that every person on the planet can own. There's no selling involved because a yes is good and a no is good. You have a tremendous product value that saves you more than you spend by a very large margin. And finally, the gift is easy to replicate, which results in a very nice, ever-growing residual income. And there is nothing better than residual income. And it pays you every month, month in and month out, for the rest of your life. Thank you for taking the time to look at the gift, and without a doubt, the best opportunity in America. Now it's your turn to make your yes or no decision. Click on the Your Choice button below to decide what's best for you.
So what's in the final version of the new tax law? Here are some changes coming to your personal finances you need to know. If you're a big earner, you got lucky. The top tax rate for individuals will now be 37%. That's down from the current rate of 39.6%. There are also 6 other brackets, which will likely bring your tax rate down. More on that in a minute. Also in the bill, the current standard deduction is nearly doubled. That's the amount you can deduct from your income right off the bat each year. For individuals, to $12,000. For couples, to $24,000. But for those who itemize their deductions, instead, you can still deduct state and local taxes, but only up to $10,000. So that means next year, you may not be able to deduct as much as you can this year, thanks to the new $10,000 cap. Now, mortgage interest. You'll still be able to deduct it, but on the first $750,000 of new loans. That's down from the current cap of $1 million. Republicans also agreed to keep the alternative minimum tax for individuals, but increase the income level where it kicks in, and to keep the estate tax, but increase the threshold for that. The vast majority of families will see a tax cut, at least initially. In the first year, a family making $100,000 a year taking the standard deduction would likely see a savings between $2,000 and $4,000 on their taxes. That same family, though, in a high-tax state who itemizes deductions would only see savings of around $1,000. Either way, those benefits scale back and then disappear completely by 2026, because that's when all the personal cuts expire under this bill. Now, the most controversial provisions. Republicans reportedly agreed to go along with the Senate version of the tax plan and repeal Obamacare's individual mandate. And the Congressional Budget Office estimates that could lead to 13 million more people becoming uninsured than under current law.
Hey, NBC News viewers, thanks for checking out our YouTube channel. Subscribe by clicking on that button down here and click on any of the videos over here to watch the latest interviews, show highlights, and digital exclusives. Thanks for watching.
At Benefit Hub, we have completely reinvented how benefits are delivered to employees. That's why 5 of the top 10 largest employers in the U.S. and thousands of small family businesses are using Benefit Hub. We start by giving you an amazing platform preloaded with just about every benefit, reward, and discount you'll ever need. Simply pick the ones you want to use with just one click. We also give you a ton of tracking and reporting tools to ensure success of your customized plan. Employees start with instant access to thousands of exclusive discounts on everyday purchases. So now they're benefiting every day, and they're engaged. And an engaged employee is a happy employee. Energize your team now. It takes just 2 minutes to set up your Benefit Hub. And it's free! Benefit Hub. Reward, engage, energize. It's what we do for millions of employees.
Hi, this is John with PDF Tax. This here is our first look at Form 1040 for 2018. It's a new form, a new tax law. It is the draft copy that was released on June 29th. So it still has the watermark on it, as you can see. You might recall that President Trump promised to reduce the Form 1040 to the size of a postcard. And so this is it. A lot different than what it has been in prior years. But it does have a second page to it, which is right here. Still, though, a lot smaller than the 1040 was in prior years. So what the IRS has done is they have created 6 new schedules to capture the information that used to be on the 1040. Schedule 1 is additional income and adjustments. Schedule 2 is tax. Schedule 3 is non-refundable credits. Schedule 4 is other taxes. Schedule 5, other payments and refundable credits. And Schedule 6, foreign address and third-party designee. Now, if you take a closer look at the Form 1040 here, one of the first things you're probably going to notice it right here is that there's only 3 filing statuses. Last year there was 5. The tax law has changed, of course, but that part has not changed. There's still 5 filing statuses. So you have to wonder, if you're single or if you're married filing joint, how do you tell the IRS, or how do you indicate on this form that that's the case? Well, we won't know for sure until the instructions for this form come out, but I'm pretty sure that the way it's going to work is this. If you enter your name and social here, just one name and one social, the IRS is going to assume that you're single unless you check one of these boxes. And likewise, if you enter 2 names and 2 socials, the IRS will assume that you're married filing joint, again, unless you check one of these 3 boxes. So I'm pretty sure that's the way that is going to work. Let's go ahead and enter some information on this form so that we can get an idea of how it is going to work this year. So I'm going to enter a single taxpayer. So I'm just going to enter 1 name and 1 social, and I'm not going to check any of those boxes up there, but I am going to enter a I'm going to enter a dependent here, and her social is going to be this. She is his daughter, and let's say that she qualifies for the child tax credit, so we'll check that box. And if we scroll down a little bit here, and we'll add some wages of, let's say, $50,000 and interest income of $1,100, and then scroll down a little bit further, and we're going to say that he has business income on line 12 here of $2,000, like that. And if he has business income, he's going to have self-employment tax. So let's enter 140 here. So 2,000 minus 140 is 1,860, and it says here that that should go to line 6. So let's see if it did, and there it is on line 6. So right now we have taxable income on line 10 of 52,960. But it looks like I forgot to put in the standard deduction, which goes on line 8. That this year, for a single person, as you can see over here, single $12,000. That's nearly double what it was last year, which is pretty nice. But the downside of that is, as you can see, there's no line for personal exemptions anymore. That's because with the new tax law, there are no personal exemptions, which is a kind of a bummer, but that's just the way it is. Congress gives and Congress takes away. So now on line 10, our taxable income is $40,960. Now, if we want to figure the tax on $40,960, we need to look at this 2018 tax rate schedule, and the single schedule is right here. And so 40,960 is right in this range. So if we pull up our calculator like that, and it says the tax is this plus 22% of the amount over 38.7. So 40,960 minus 38.7 equals that. Times 0.22 equals that, plus 44,53.50 equals that. So that is our tax right there. The tax goes on Schedule 2. So we'll scroll down to Schedule 2, and the tax is right there. So we'll enter 49.50 there, and it goes back to line 11, which is right there. We also have some non-refundable credits we want to enter on Schedule 3. So let's go down to Schedule 3. First one is the Child and Dependent Care Credit that came from 2441. So if we were to fill out that form, we'd come out with a credit of $400. And then we have a child tax credit. You remember we checked that box on the first page of 1040 to say that our child qualified for that credit. And the nice thing about that is that has been increased from $1,000 last year to $2,000 this year. So that should come back to line 12 on 1040, right there, 2400. So that's good. Now let's go down to Schedule 4 for other taxes. Right here, we had self-employment tax because we had that self-employment income. So that is going to be $280 approximately, something like that. That goes to line 14. So that is right there on line 14, and now our total tax is $28.30. Now let's say that we had income tax withheld on our W-2 of $2,400. We also probably made some estimated payments because of the fact that we had self-employment income, and that will go on Schedule 5, right down here on line 66 is the estimated payments, and maybe $500 for that, which goes to 104017D, which is right there, 17D. And so the total payments is $2,900, and we have a refund here of $70. So that is pretty much it for this. That's how that new tax form will work. Thanks for listening.
Hi, Mark Kohler here, CPA, attorney. Now I'd like to talk about itemizing versus the standard deduction. Now this is a big decision because it can have a huge impact on your tax return and save you a lot of money, a lot of taxes. Now in 2018, the rules changed, but the best way to understand the rules in 2018 is to understand what they were before in 2017. And many of you, of course, are preparing your 2017 tax return. So let's break it down, what you need to know when it comes to itemizing and the standard deduction. Now, of course, the general plan here is you want to add up all your itemizing and see if it exceeds the standard deduction. Now, in 2017, the standard deduction was a lot less, around $6,000 single and about $12,000 married. That's been doubled for 2018. That's the standard. So you want to add up all your itemized and see if it exceeds that. And of course, you want to take the higher number. So let's go through the itemized deduction list. Now, there's 5 main pieces to itemizing. Number 1 is medical expenses. And this could be a big one for a lot of families. They spend a lot on medical, and this is your out-of-pocket medicals, co-pays, deductibles, prescription drugs, chiropractic, acupuncture, service dogs, service animals, that sort of thing. All of that added up. You want to look at that number, and anything above 10% of your adjusted gross income is deductible. So it's only the amount above that number. So you do the math, you say, what's my adjusted gross income? Let's say $50,000. Multiply it by 10%, that's $5,000, and then anything above that would be deductible. So if you had $6,000 in medical, you'd get to deduct $1,000. That's the first figure in your itemized deductions. Number 2 is mortgage interest. Now this was a phenomenal write-off for many, many years. It's changed dramatically. You're going to want to watch the video on mortgage interest. But in 2017, still a pretty darn good write-off. Now what you're going to do is take all of your interest on up to $1 million worth of mortgages on a qualified residence. And you get to deduct the mortgage interest on a HELOC or a second mortgage up to $100,000 worth of that mortgage, whatever the interest is on that amount. So you add that up, and that's your mortgage interest figure for, let's say, 2017. Third, charitable donations. This is a nice one. You want to put this in the list. You're going to add up, again, these 5 numbers, number 3 being charity. And this includes up to $500 of just clothing items that you might leave at Goodwill or Salvation Army. Get a little receipt as you drive through and drop off your items. And that's going to be $500 plus, all those things you might make a donation for your church or whatever. Keep the receipts. That's your charitable figure. Number 4 is SALT, state and local taxes. This is a big one. There was no limit in 2017. So any property taxes you paid, state income taxes, local taxes, add all that up, and that's line number 4. Finally, number 5, miscellaneous deductions. Now, this is kind of a grab bag. There's a variety of items in it, like unreimbursed employee expenses, tax preparation fees, investment expenses. You're going to add up all those items, and they go into this miscellaneous column. Now, you can only deduct those items over and above 2% of your AGI. So if you made $100,000, you'd take 2%, which is $2,000, and that's the floor, and then anything above that would be deductible. So if you had $3,000 of miscellaneous, then you get to deduct $1,000 because that's the amount over the 2. Now, in summary, you take those 5 items. Again, we're going to go through it: medical, mortgage interest, charitable, the state and local, and the miscellaneous. You're going to add up those 5 items and see what the total is. If it's greater than your standard deduction, you're in the money. Take that, and it's going to save you taxes when you start to calculate your taxable income. Now, quickly, I want to tell you what the rules are for 2018. You don't need to worry about this if you're preparing your return for 17, but you might want to know this just as you go to spend money in 2018, maybe realizing you're not going to get a write-off for this, and be aware of those type of expenditures. Now, like I said earlier, the standard deduction has been doubled, but in 2018, also the itemized deductions have been limited. Let's go through some highlights real quick. First, medical. Pretty good thing here. The expenses for medical are now deductible above 7.5% of AGI, not 10%. So we get a little more of a window there. Charitable deductions, same, not a big deal there. But SALT, major problem, state and local income taxes. All of those taxes are added up and limited to a $10,000 maximum number. It's going to hurt a lot of people in states where they may pay a lot in state taxes and used to be able to deduct that as an itemized deduction. Now, the mortgage interest, major changes. Fairly complicated too. Shot a separate video on that. Watch it when it comes to mortgage interest, because that's going to play into your maybe strategy for buying a home this year or doing any refinancing. But it's been limited. And then finally, the miscellaneous itemized deductions, gone entirely. No deduction there anymore. So in summary, in 2018, millions of Americans are going to be choosing the standard deduction rather than itemizing because it's been limited so much. And then a lot of Americans that still have itemized deductions, but they're limited, you're going to pay more in taxes. This is why this new tax bill has winners and losers. Be aware of this, gather your records, and input this information so you can make the best decision during tax preparation. Thanks so much for watching, and if you found that helpful, please look in the description below. I've got links to my tax and legal library, my QuickBooks training videos, how to start a small business, 50, 60, 70 videos, some as long as 30 minutes explaining more information on tax and legal strategies that will change your life. Also, if you'd like to subscribe to my newsletter or check out my social media links, please click here. They're weekly free tips and strategies and articles that you'll find extremely helpful. And I would appreciate it if you'd subscribe to my channel. I've got so many videos here I produce every week on my YouTube channel, and I'd love to give you a ping every time I shoot a new video. Thanks so much, and keep living the American dream.